Yeah, Zamro, I need to use my friend. Thank you.
That was bang bang.
Alright, what is going on? Oh man, started. Alright, what is going on? Everyone up here all doing well. So, this is actually the first video I'm recording here in the office. So I thought I'd make an educational one. Now, I know quite a lot of you have been asking for an office tour. However, it's actually not quite ready yet. There's a lot of stuff that still needs to be done. We need to bring in a TV. There's a lot of stuff that we still need to buy. A couple boxes that we still need to move. Actually, let me just show you guys how it looks currently. So, at the moment, I got my setup done here. I've got a 34-inch monitor, AOC. My friends over there got also an AOC monitor, but 24-inch. We set up the LEDs already. We've got in our shelves, water, hanger, and whatnot. I'll go into more details in the office tour video. But however, as you can see here, look, we got all of these boxes that we still need to get rid of. TV still hasn't been put up. We need to put up a lot of canvases here on the wall. So as you lot can see, there's still a lot of work that needs to be done. But anyways, let's get back into the video. So let me just position this here real quick. Alright, so where was I? Cool. So in today's video, I'm actually going to do a video on how to re-enter a trade and how to scale in more positions, as it was a requested video from quite a lot of you. A lot of you have been asking, what rules do I follow when I look to re-enter, and what is it exactly that I look at? So let's get straight into the video. How to scale in another entry. Now, to understand how to scale in a trade, you must first understand the most important foundation of trading, and that is the understanding of market structure. Now, if you guys already haven't seen the video, I actually have a video on market structure up on my YouTube channel, so definitely go check that out, as it'll be very, very beneficial to understand the rest of the strategy, and it's very important to actually know in trading in general. So I drew something very quickly here for you guys to quickly understand, for those of you that haven't watched the video yet. Alright, so in this case right here, we can see that price is printing higher highs and higher lows, indicating in this area right here that price is in an uptrend, right? So as you can see here, price pulls in, creates a higher low, taps into an area of demand, and heads over to the upside. So that would have been your initial entry, right? Now, once price breaks structure, that's the first indication that you can look for a re-entry. Secondly, you identify your discounted levels of demand, and make sure when you find an area of demand that has imbalance that was left after it. Okay, so as you can see here, price takes out the high, pulls back in, creating a higher low, mitigating a discounted area of demand, and then continues to go over to the upside. Now, notice what happens at this area right here. So if we weren't able to see this part onwards, what we would expect is price to continue the uptrend, right? Would expect it to pull back, create another higher low, tap into a new area of demand, and then head over to the upside again. But instead, what happened? It failed the demand, and then it took out the recent low. Now that's what we identify as a change of character. Is the first indication that price is shifting in trend. As you can see, price was in an uptrend right here, and then what happened? Price printed a low, taking out the recent higher low, pulls back in, creating a lower high, mitigating a level of supply, and then continuing to print lower lows and lower highs. Okay, so the two things I want you guys to understand is that we enter when price breaks structure, and you have to identify the difference between a break of structure and a change of character. So as you can see here, price is continuously taking out the highs, meaning it's just breaking the structure. But then once price takes out this low, that is identified as a change of character. It's essentially a break of structure, but it's a break of structure which indicates a shift in trend, okay? A change in character. So that's the main important things that I want you guys to be familiar with before I show you guys live examples on the chart. On a trade that I actually took 2 weeks ago on silver. It's posted on my Instagram, but I'll show you guys in a bit. So again, this is going over the same thing. As you can see here, price printed a higher high, pulls back, printing a higher low. We're getting at the area of demand, take profit at the highs. Price takes out the high, shows his willingness to continue in the trend, pulls back into a new area of demand, a discounted area of demand, continues over to the upside. And then what can we expect? So look, price is now pulling back, we're still in the uptrend, we expect this area of demand to also hold. However, what happened? This demand did not hold, the demand failed. And not only did the demand fail, it also took out the low. Price has taken out the 15-minute low, indicating a shift in trend. And then what happened? A new low was printed. Once this new low was printed, we have now identified the change of character, and we've took into account that price is now shifting in trend. So now, as you can see, price pulls back. That's when we mark out the last area before this impulsive move, which took out the low. And that will be our fresh area of supply. So as you can see here, once the price printed a new low, it pulls back into a fresh area of supply, mitigates it, and then continues over to the downside, taking out the last low that it printed, creating an even lower low. Okay, that's just a further confirmation to let you guys know that supply is now in power. But then what happens? Price pulls back into a new area of supply and then continues over to the downside. Alright, so I hope you lot understood what I just explained, and now let's move on to the charts. So now we're taking a look at silver, and this was actually a trade that I took a couple weeks back. I had it posted up on my Insta if you haven't already seen it. So if you actually head over to my Instagram right now, let me get that, ZM Capitals, okay, scroll down and you'll see the post right here that it was a trade that I took on silver, and I actually broke it down for you guys. So if you do follow my Instagram, and sorry, if you don't follow my Instagram, definitely check it out, because I do post a lot of educational content there. So as you can see, price pulled back into an area of supply, showing some rejection, took out some lows, pulls back into a new area of supply. That's what I was explaining to you guys in the slides, by the way. That's how you rescale in more positions. Okay, so as you can see, took out this low, pulls back into a new area of supply, and then continues to move over to the downside. Okay, we were able to capitalize on this trade, securing a nice 19 risk to reward. Okay, but anyways, let me head back to the charts and continue with the video. So going back to the examples that I was going through on the slides, and identifying how you can scale in more positions. So as you can see in this price action right here, we can see that price is distributing over to the downside. Okay, however, we're going to be focused on this phase right here. As you can see here, price is continually taking out the highs. Okay, and demand is being respected, showing that buyers are still in power. So how to scale in positions in this phase right here? Once price takes out the high, you wait for it to pull back into a discounted level of demand. Okay, so as you can see here, this high was broken, price prints a new high, pulls back, creating a higher low, mitigates an area of demand, and then continues to move over to the downside. And then again, it now takes out this high, creating a higher high, price pulls back into an area of demand, and then continues to move over to the upside. Now as you can see here, again, price takes out this high, right? As you can see, it wakes out this high. However, we expected that this area of demand was going to hold. However, as you can see, what happened? When price took out this high, it pulled back. We got into some longs here, and what happened? It took us out. Demand failed, and this low was now taken out. As you can see, this was on the 30-minute time frame. This low has been broken. Price has now printed a lower low. That was our first indication that tells us that price has now shifted over to the downside. Okay, now once we had that change of character right here, that's when we started to look for our fresh levels of supply to see if supply is now coming into power. So as you can see, price now pulls back into this area of supply. I didn't take this trade because simply the risk to reward wasn't worth it. As you can see, I would have entered here and my stop loss would have been up there, so I waited for further confirmation. Okay, so now let's head over to the lower time frame. Now let's focus on the price action right here. Once price mitigated into this area of supply and actually rejected, that's when we knew that supply was now in power. As price mitigated, took out the lows on the 15-minute. That was a change of character. Okay. However, price didn't pull back, as you can see, into levels of supply right here. So we waited until it pulls back into a level of supply. As you can see, it could have took a sell right here and then continued the wave over to the downside. So once this area of supply was now mitigated, we waited for price to again break the low, because then that's how we scale in another position. So once this area of supply was mitigated, price took out the low, again showing his willingness to move over to the downside, pulls back into a new area of supply, which was on the 30-minute. as you can see right here, very nice candle, buy to sell candle which broke the low, price pulls back, mitigates the candle, and then continues over to the downside. Okay, now if I actually go head over to the lower time frame, what can you see at this point right here? Okay, let me show you guys real quick. Oh no, sorry, what was this one right here? So I was showing you guys this one right here. Price pulls back into a 30-minute area of supply. You could have got into a position right here, and then again you could have got into another position. Why? This low was now taken out, and as you can see, what happens? Price pulls back, taps into a new area of supply, and this supply was on the 15-minute. Why does it keep doing that? All right, 1 second please. Where was I? All right, cool. So this point right here, price taps into this 30-minute, takes out this low, but then look what happens. It pulls back nicely, mitigates this 15-minute area of supply. So that could have been another entry that you could have got in on. As you can see here, this would have been a new area of supply. So you'd have gotten here, price took out the low, pulls back into this area of supply on the 30-minute, and then again it takes out this low, pulls back into this 15-minute area of supply, and again, as you can see, it was respected nicely. It shifted over to the downside. So you could have gotten another position right over here with your stop loss just at the wick. Okay, so I hope that's very straightforward. And then again, price continues to take out the lows. Now these were the trades that I got in on a couple weeks ago that I shared on my Insta. Again, the same exact concept. What happened? Price printed a low low, took out this low. Okay, we had all of this imbalance, and what do we know when we see imbalance? Price must retrace to fill in that imbalance, right? So once I identified that this low was broken, I'll wait for price to pull back to fill in all of this imbalance and mitigate into this level of supply. Now again guys, remember how I told you guys, when you identify levels of supply and demand, you want them to be in either a discounted or a premium level. Okay, so now if I fib up the price range for you guys from the high to the low, what can we see? That this area of supply aligns nicely with our 70.5 and our 79 level. Okay, adding more validation to your zone. So not only did this area of supply take out this low, it also created all of this inefficiency right after it, and it lies in a very, very nice premium level. Okay, so that was our first entry. Price pulls back, taps into this area of supply, and we capitalize on the short from this area right here. Now, what happened at this point? There, price took out the 15-minute low. Okay, that was your change of character. That's when we look to scale in another position. Okay, so as you can see right now, same thing. Price expands, takes out the low, leaves behind all of this imbalance. So what happens? Price pulls back after it has taken out the low, pulls back, fills in the imbalance, mitigates into this last area of supply, and then continues its move over to the downside. So these were the two trades that I got in on, but I showed you guys examples of how you could have scaled in so much more positions earlier on. You could have gone at this supply right here, scaled in another entry right here, scaled in another entry right here, and then again you could have gotten to these two entries that I capitalized on a couple weeks back. So now we're gonna wrap up this video as it's coming to an end. So just to summarize everything again and the rules that I take when I want to scale in another position into my trade. First, you have to understand market structure. Understand the foundation of trading, which is the understanding of structure. Again, if you haven't already, check out the video that I've made on market structure. It is very, very simple and is very, very essential to understand trading in general and how to scale in more positions. Okay, so first you have to understand market structure. Now the rules to how to scale in another position. Identify the structural breaks. Once you identify a structural break, you mark out the area of supply before that structural break and expect price to pull back into that area of supply or demand and then continue the move over. That's how you enter another position. Okay, so you wait for a structural break, you identify your premium and discounted levels. Once you've identified them, make sure the zone has imbalance that was left right after it. Once you've identified those, wait for the pullback into that new zone, wait for it to be mitigated, and then scaling another entry. And that is about it. Okay guys, so if you have any questions, feel free to DM me. I'm not, again, like I said, I don't really reply to the comments down below. So head over to my Instagram, drop me a DM and I'll try to get back to you. Alright people, take care of yourselves. Peace.
Yeah, yeah.